is a meeting of the European Central Bank. Mario Draghi is widely expected to keep interest rates near zero at 0.15%. This despite last week's figures that showed that Eurozone inflation fell more than expected in July. The ECB president is also expected to face tough questions about his plans to kickstart sluggish growth. Now, for more on that, we're joined here on set by Naeem Aslam, the chief market analyst at AvaTrade. Tell us a bit more about this ECB meeting. First of all, do you agree with these predictions, and what does it mean about the outlook for the European economy?
Thanks for having us. I agree with you, Kate. He's not gonna move a muscle when it comes to his decision today. So there'll be no more rate cuts. There'll be no more further announcement when it comes to the ECB, because he has only done that recently. So he needs more time to see how that is going to impact in the economy. Yes, you are correct. The data very much is impacting the economy. It's the manufacturing data that we had last Friday was very much flat, and even the industrial production data that we have received this morning was appalling. Now, Germany is the economic engine for the Eurozone. Now, if that country itself is dragging down, then we have a very little hope. But at the same time, ECB and everything else with that, they are not going to be too much focused about the data itself, because they wanted to see how the interest rate is going to play. And let's not forget, the TLTROs hasn't even actually kicked in. So probably we'll be looking at maybe towards the end of this year if there's any further reaction by the ECB.
Now, one of the things we are expected to hear a lot about is geopolitical tensions, the possible spillover effect on Europe of these Russia-Ukraine tensions and the Western sanctions on Russia.
Yes, you're correct. I mean, 6,200 companies are only involved in Germany, which are dependent on Russia. Now, the industrial production and the factory orders were clearly dictating this thing, that look, the sanctions on Russia are going to cut into flesh for our own growth. And I think this is something that the countries were already they were prepared to have this one. And now going forward, this is something a concern. And then what we want ECB to do today is to leave the door open for further quantitative easing, as he said previously. Because in his previous meeting, he said we are going to keep the rate going. We are going to keep the door open for further quantitative easing. And this is what I am very much focused, and I want to hear the same kind of a verdict, the same kind of a dovish tone today in his meeting.
Now, you and other analysts really have described France as the problem child for Europe and the ECB. We know the economy is still struggling. As I said earlier, François Hollande's plans to boost that growth have hit yet another roadblock. Now, the president has called on the ECB to take further measures to boost growth and fight deflation. Do you see that as realistic? And what role do you see Europe's second largest economy as playing in the bank's decisions?
I think the most important aspect is if we look towards the divergences. Germany and France, they make the 50% of the GDP of the Eurozone, and that divergence is increasing. And at this time, it is standing at 2.6. So what Hollande is actually want. He's crying out for more help from ECB. He wants more injection in terms of liquidity. But TLTROs are coming, and that's going to kick in possibly in September. So he wants more money to come in, but at the same time, what Hollande needs to do, he needs to cut the debt to GDP ratio, because country is facing a massive problem when it comes to unemployment, when it comes to growth. There is nothing there. And then he promised to cut 60 billion euro worth of budget in 2015 to 2017, right? And we don't have any more clearance. We don't know how that budget cut is going to take place. He hasn't given us more of information on that.
Great. Thank you so much, Naeem Aslam. Thank you for joining us. That's all the business news for now. It's back to you, Jade.
Thanks very much, Kate Moody. All right, it's time now for Web News.